What's up everyone, welcome back to another weekly market update. Now before I get into this video, I just have a quick announcement to make. Trading Accelerator is officially going live on August 5th, 2023. For those of you who don't know, Trading Accelerator is the name of the free trading course that I am about to release. Now I know what you might be thinking, a lot of these free courses out there teach you absolutely nothing but the most basic of things. This is going to be different. There is not going to be any BS, there is no fluff, there is only value, and by the end of this course, it will change the way that you trade. If you haven't already signed up to the waitlist, you're going to want to do it before August 1st because there are going to be some exclusive bonuses that are only available to you if you sign up for the waitlist. But with that out of the way, let's get into the video. So in preparation for the launch, this is going to be just a shorter video, just a short and sweet, giving you a market update on Bitcoin and Ethereum primarily. So if we simply look at Bitcoin, honestly, it is not looking great because of the fact that we took out this range high and then right now we are sort of consolidating around range lows. That doesn't give you like a really good sign. And here's what I mean. If you go into a lower time frame, such as the 1 hourly, you will see that after this dump here, there is a lot of trapped volume over here, which also means that the market makers might not want to bring the markets higher in order for everybody that's trapped here to be able to get out of their position. And if you notice how the price action has been playing out, your swing lows have just been getting constantly attacked and attacked and attacked, and the swing highs not so much. So basically what I'm trying to say is that at least on the lower time frames, such as the 1 hourly, you are getting pretty bearish just market structure. And it's not like super bearish yet, but the fact that you haven't broken above any of these highs convincingly is not a good sign. Even though we are in a range right now, and I know I talk a lot about ranges, and you know, if you take out the range low, you take a long, go to the range high, you take out the range high, you take a short and go to the range low. Even though I talk about that a lot, it's also very important for you to keep in mind what is happening on the higher timeframes. Now, if you look at the higher timeframes at the moment, we are, well, forming a range within a larger range. It's the range matrix. And right now we have been consolidating around the range high. Now, there are only two ways that this can go. Well, duh, right? Like, it's either you go up or down, right? But I do want to give you the details of how either scenario is going to play out. First things first, let's talk about the long scenario. Now, given that we've taken out the liquidity at range low, you can reasonably expect the markets to go higher. And the sign that you want to look out for here is we're looking at the daily chart at the moment, which is the higher time frame. What I want to see is an engulfing candle towards the upside. Basically, notice how like this candle here completely closed above this previous candle over here. This might indicate the market makers' interest in bringing the markets higher from this point onwards. That is scenario number one. At the very least, I don't want to see today close a candle body beneath these lows. And as of the time that I'm recording this, which is on Monday, around London morning, things could change. Basically, if we continue to get, candle body closes above on the bullish side, which indicates a strong willingness from the market makers to bring the market higher, then 100% I would start looking for longs and aggressively long all the way until we hit our higher time frame target of 35k. That's going to be scenario number one. So the way it's going to play out on the lower time frames is I'm going to just draw this line here and then go into the lower time frames. Basically, you don't want the daily close beneath here. So ideally, sometime during New York today, you want to see the markets form strong candle body closes and just put in some bullish market structure that carries on from the beginning of New York to the end of New York. And what that's going to look like is, for example, if price, breaks upwards right now, this is going to become a bullish order block. Then you will look for a retrace into the bullish order block and then target new highs because that's how the markets move. And then voila. That's the kind of market structure that you want to be looking at. And every time, of course, every retrace is going to come back to either a fair value gap or an order block. So just look out for that. That is the bullish scenario. Now the bearish scenario, which is at the moment looking more likely at the moment, just at the moment that I'm recording this, bearish scenario seems more likely. And I mentioned this last week as well, that it wasn't looking too good and it might start dumping last week. And here's going to be the bearish scenario. Simply put, you close the next couple of days with strong bearish candles. And later this week, we are actually going to be getting an announcement about the federal funds rate. For those of you who don't know, that is the interest rates. And there is rumors, in fact, there is a very strong whisper in the wind going around at the moment that the Federal Reserve is going to be looking to raise interest rates this month, which also means in the next few days. If that happens, that will just immediately confirm a bearish scenario for Bitcoin where, things are going to start going down from there. Because if you compare Bitcoin price action to interest rate hikes and pauses or whatever, Bitcoin performs the best when interest rates are not going up. In fact, Bitcoin performs even better, and crypto as a whole performs better when interest rates are going down. So you do not want to see interest rates going higher if you are bullish. So if that happens, that will likely send the market into a strong downwards movement. Now, if that happens, then that pretty much confirms our bearish scenario. Now, I am not going to lie. I did buy Bitcoin all the way back from 16K. I have yet to take profit on that Bitcoin because there is still somewhere in my mind where I am still expecting 35K. But of course, if the markets give me signs that it wants to go down, I'm not going to stubbornly hold on to my holdings. I'll actually take profit on my crypto holdings that I bought back at 16K. Now, here's what to look for in terms of the bearish scenario. You know, if you come up with the interest rate hikes, price is going to form like a pretty strong movement downwards. Now, what you want to look for on the lower time frames is it's going to look something like this, where you get, you know, a sideways consolidation, right? And then eventually you get an expansion. This is called initiation. And then ultimately you come back to mitigate before price does continuation. So you're going to want to look for something similar to that, whereby you get some kind of sideways movement. Maybe it's here. Price initiates, you know, lower. Eventually you're going to come back to mitigate before continuation. So it will come back into that original area of consolidation. And usually, most likely, if you draw a parallel channel instead, you'll see this much clearer. Usually price tends to come back to the mean of, you know, the original area of consolidation. And then you will go for continuation. Usually the thing that happens is it's actually very simple for you to identify, you know, potential tops and bottoms. You just got to draw a fib from high to low, and then you look for a -1 and a -0.5 range expansion. It happens pretty much all the time. And just to show it to you, like it's just a recent example, I draw a fib from this low to this high here and look at where the top is. -1 range expansion. This is how the algorithms move the markets. It is not coincidental. And when you are trading range expansions, then just use, you know, the -1. That means one range expansion. And that is the plan that you want to look for. So if we apply this to the high time frame, because all markets are fractal, meaning something that happens on the lower time frame is going to happen very similarly on the higher time frame as well. And if we look at it based on that, then it becomes pretty simple, right? Let's say that on the daily chart, this is our, you know, original consolidation range. Let's say something like that. We're using the wick highs and the wick lows for this purpose, just for the moment. So you get initiation, right? Initiation tends to be a pretty strong move. Wait for mitigation, right? Market makers will always mitigate before going on and proceeding with continuation. And then, you know, you continue. And then the way you do this is, you know, just draw a fib at the low, look for a -1 range expansion. Pretty much lines up with 27K 900, which is also the middle of our previous range, right? This is our previous range. That's the middle of the range, 27,900. So that is the bearish and bullish scenario for Bitcoin at the moment that you want to look out for. If you ask me which one's more likely, honestly, I can't tell you. In fact, I was actually thinking pretty long before I recorded this video, just because there is nothing much really to say other than wait and see, because that is how the markets are like most of the time. Back when it was still like going up, and even in this initial range, it was pretty easy to predict like what was going to happen. But at this point here, it's sort of like you're sort of in no man's land. And there is a saying in the markets that sometimes the best position is no position. And in my case, sometimes you don't want to predict. In fact, you almost never want to predict. It's almost always better if you simply wait and see what the market gives you, and then you trade accordingly. That is my tip of the day for you guys today on Bitcoin. And now let's move on to Ethereum. Now, Ethereum's higher time frame target is still remains 2100. The only reason why Ethereum is taking a dump right now is because Bitcoin is also taking a dump right now. Bitcoin hasn't been performing the strongest. Last week, we saw a lot of altcoins explode and take money away from the large cap coins like Ethereum, like Bitcoin. So what should we expect for Ethereum moving forward? Well, if we get the bearish scenario on Bitcoin, which is pretty much, you know, interest rates going up, and then you get the initiation towards the downside, and then, you know, blah, 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 you know the plan, then obviously Ethereum is just going to dump from here. We can just treat it as Ethereum went for a liquidity grab on these previous highs here. And then after taking out the liquidity, well, now you move on to the next point of liquidity, which is over here at the range low, which is about 1625. Now, that is scenario number 1, which is, you know, the Bitcoin bearish scenario. Scenario number 2 is also going to involve some kind of a sell-side liquidity sweep. Why is that? Well, if you guys remember 2 weeks ago when I said Ethereum was at this point here, that this would be a very good buy opportunity. Why? Because in buy programs, right, when the market is bullish, let me just zoom out up here. When the market is forming higher highs and higher lows, when the market is bullish, you want to look for sell-side liquidity sweeps in order to enter the markets, because I want you to think of the market as, let's say the market is a Ferrari. In order for the Ferrari to go up or down, you need fuel. where does fuel come from? Well, if you want to go up, the fuel is going to come from these stop losses down here, right? These are called sell side liquidity. If the market wants to go down, then you will take buy side liquidity before coming down. Just to give you an example, I can see it on the chart immediately. That is liquidity over there, where you have two relatively equal highs. You take out the liquidity before forming a new low. Usually in a sell program, buy side liquidity sweeps, this is buy side liquidity sweep, right? BSL, buy side liquidity. Buy side liquidity sweeps will give the market makers enough fuel and firepower to form new lows. Similarly, when you are in a buy program, meaning something like that, you have liquidity over there, sell side liquidity. This is SSL, right? In buy programs, right? When the market makers and the algorithms want to put the market into a buy program, meaning bullish, then you look for sell side liquidity sweeps in order to propel the market to new highs. So notice what happens when you take out the liquidity here and here. Immediately you form a new high. Now, this is usually a pretty good sign if you have a bullish bias. You simply look at these sell side liquidity sweeps and then see what kind of reaction follows. Because if you don't form new highs from these sell side liquidity sweeps, then obviously things are not going to be looking too good. Again, once more here, you take out the liquidity there, immediately look at what happens. You form a new high. And again, once more here, you take out liquidity, bam, right? Explosive movements. And that's what we want to see. And yet, this is what we're currently seeing on Ethereum. It is the complete opposite. Meaning, right now, we are taking out buy side in order to form new lows. Buy side liquidity gets taken, new lows form. Buy side gets taken, and right now you are in the process of forming new lows. So this is not a good sign if you have a bullish bias, and hence why I say you're sort of in no man's land at the moment, where, you know, Ethereum has retraced quite significantly and you sort of like back at range lows already. So I wouldn't necessarily just want to short in the middle of nowhere. And yet I wouldn't be comfortable going long just because I am anticipating some kind of news coming out from the Federal Reserve in the near future. So again, patience pays in the markets. You don't have to take a trade every day. Some days are not trading days. Some weeks are not trading weeks. Heck, even some months are not trading months. I have a friend that only trades gold and he makes about 100 grand per year. If you look at his trading activity, he showed me this before. January until October is like, he takes 0 trades for 10 months of the year. And then in November and December, he goes absolutely ham and makes a few 100K per year, trading 2 months of the year, and then just spending the rest of the time traveling and doing whatever. That is the reality that you live in as a trader. Just because you spend more time in front of the charts does not mean that you're going to make more money. As traders, we do not get paid based on how much time we spend in front of the charts, but rather we get paid based on the quality of the decisions that we make. And how do we make better quality decisions? Well, you wait for better quality setups to appear before you start trading. In this case, sort of in the middle of nowhere. This is not an ideal setup. In fact, this is pretty suboptimal. So yeah, for now, I'm just patient, seeing how things play out. Not overly eager to make any decisions that I might regret, such as selling my Bitcoin bag, selling my other altcoins, just to find out that 1 week later, price is going up again. Again, patience pays when it comes to trading. If you can internalize this lesson, you will be successful. Anyways, over the upcoming days, I will be giving away quite a few bonuses to people that are following me on Instagram and Twitter, especially in relation to Trading Accelerator. One of the things that you could win is a private coaching call with me and my coaches. If that sounds like something that might benefit you or interest you, I'm going to leave the link to my Instagram and Twitter down in the description box below. And until then, I'll see you in the next market update. Cheers.